Hello and welcome. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. Today, the markets are doing well. Cement is doing very well. In particular, mid-cap real estate names are doing phenomenally well. IB Real, Ajmera Realty, all these Bombay-based real estate companies are also doing very well. But the last hour of trade actually is the test. In the last week, we saw markets selling off every time in the last hour of trade. Or the second half actually is the real test whether we sustain these levels. So we've gotten ourselves in a bit of a congestion, but the real party is actually happening in the broader market. So we thought of getting in somebody to talk about the mid-cap end of the market, who's a specialist in mid-cap as an FIIs. Harikrishnan of Blue Lotus is joining us today to discuss more, because they do run offshore funds mainly focused on the mid-cap. Even their AIF, the domestic one, has got more tilt towards mid-cap. So mid-cap is an area of interest. Hari, good afternoon. Thank you so much for chatting with us. And now mid-cap IT, I would like to start our discussion with, had a phenomenal run, completely got re-rated because of what was happening, commentary from large-cap IT company names, etc. And overall, digital getting a big boost. You played mid-cap IT well as well in your funds. Talk to us, does it have much more juice on the upside in terms of PE re-rating as well as earnings growth ahead? What are your thoughts there?
Good afternoon, Ajay. Thank you for inviting me in the show. Yes, we continue to bullish on Indian mid-cap space. If you look on the earnings front, compared to the Nifty earnings for 2019 to 2022, we are expecting around 33% growth. Whereas Nifty mid-cap growth is expected to be around 95% for the same 3 years period, which is 3 times higher. So the one is on the growth side, we are comfortable. Second thing, on the valuation front as well, the earnings yields for the mid-caps are 150 to 200 bips higher than the large caps companies, which gives the valuation comfort as well. So we continue to be bullish on the Indian mid-cap space.
Right. Hari, what are your thoughts on the entire manufacturing space, be it PLI, be it automation, the engineering and automation space, feeding into large capex themes? Because I do see some names who are feeding into this consumer durable PLI theme. I see some names out there which are capital goods and are also feeding into the large capex theme, which is also unraveling. What are your thoughts on the earnings trajectory here and the kind of valuation this pocket is trading at? Because it's a deep cyclical and comes out of a cave after a very long time, every time in the cycle.
Yeah, so we are continuously bullish on Indian manufacturing sector. The revival in global supply chain after 18 months of COVID disruption would
right.
There's some certain pocket of the manufacturing, certain part of manufacturing companies are slightly overvalued based on the new recent development on the PLI schemes. But there is another set of the markets which still gives us a value, and especially as you rightly pointed out on the capital goods segment, where we are expecting a good revival in the capex spending in the coming years. So we continue to be bullish on the companies which are a beneficiary of the PLI schemes, as well as the capital goods cycle revival.
Right. You also have interest in the entire food processing space. Now, food processing or processed food space in India is relatively in smaller mid-cap stocks in the listed space, and a lot of them have also got present of private equity also. Some of the names do have private equity presence there. How are you really looking at this food processing kind of plays? Do you think this is scalable? Because they are feeding into the bigger consumer FMCG kind of a play. What kind of scalable options do you see here?
Yes, so this is the this consumption play we are doing on bullish on the Indian food sector. And even you are aware that there's a PLI scheme is coming for the food processing industry as well. Um, this is a space which we are looking a kind of a COVID recovery play as well for the global exports markets, as well as the domestic consumption theme, which is currently we are expecting post the COVID recovery. Yes, these are the small companies currently, but once if you're looking 4 to 5 years kind of a view and the growth across this spectrum of the space, I think we should see this small or mid-small companies can becoming a largest play going forward. And some of this, they are entering into the value-added space. I think that space will able to give them a scale and the market size as well to enter into the new markets.
Mm-hmm. Right. There's an entire, kind of a big re-rating, some part of COVID, some general awareness for healthcare increasing. This entire branded hospital chain business. We also saw some big deals happen in the diagnostic space. How are you playing the healthcare theme in your portfolio? And don't you find the valuations a bit rich now? Or do you think that the kind of earnings trajectory lies ahead, there is room on the upside?
Oh, yes. If we are bullish on both the diagnostic as well as the hospital chains, yes, both this diagnostic and hospital chains valuations have been run up quite a bit post this COVID pandemic things. But these are sectors which has a very long runways, and we see a lot of healthcare spends happening in India. And the short-term valuations may, gives you a kind of a 40 valuations in the this sector. But when you're taking the 3 to 5 years kind of a time frame, this is the sector in India we'll see a kind of a secular growth happening here, and more and more unorganized players becoming an organized, and then organized player are taking over the larger chunk of the unorganized players market as well will evolve in these things. And the second another important thing that triggered in this thing is the emergence of medical insurance in the sector will be very much helpful for both the diagnostic as well as the hospital chain. I think the medical insurance things will trigger the next wave of growth for these companies.
Hari, are you keeping some powder dry to play these technology-led consumer companies, consumer tech as they are known? Zomato is right up here, and Nykaa and Policy Bazaar also lined up ahead. Because the opinion is quite divided. One say there is no visibility on growth, on profit. There's just hyper growth here. Others say that and call it expensive. In fact, how to value this company there itself is a bit of a question mark. But then there is a very big pocket who say that the growth trajectory which lies ahead and the scale which can achieve, whenever it turns to profit, the first quarterly profit would be in millions of dollars, way higher than a traditional company turning around into profit. What are your thoughts here?
Yeah, Ajay. We are bullish on the new age tech companies, and we have already a couple of companies in our portfolios. And as you are aware, the India is the home for the 50 unicorns, and the new age tech companies could add an additional market cap of anywhere between 200 to 300 billion market cap in the next 3 to 4 years, led by a Jio platform, Flipkart, Paytm, Zomato, etc. How to value these companies is going to be a big challenge from a traditional valuation metrics perspective. Rather than starting with an analysis of these companies with a past performance, we should examine the expected long-term development of the company's targeted markets and then work backward. Compared to the traditional valuation models, in a new age tech businesses, the growth rates are higher than the discount rates in the valuation model. Most of the value lies in the future. We normally overvalue the growth rates and undervalue the durability of these tech companies. which dominates the value equations. The network effect of these businesses gives a huge opportunity combined with a strong technology. So when we are valuing these companies, in a long-term projections are highly uncertain in these businesses. We need to value the company under different probability weighted scenarios and how the market might develop under the different conditions. This may quantify uncertainty, but that will not make it disappear. Investors should take a call based on one's risk profile and the holding period. As we are looking the first IPO kicking in now, we can't miss these companies which are going to be the drivers of Indian economy going forward. Whether it's a fintech or agrotech or edutech or food tech companies, we need to be present in this thing, and we need to find a way to value these companies. As a traditional VCP guy, we used to value these companies on the matrix, which is maybe a traditional market players also needs to now start using this.
Right. All right, Hari, we'll let you go on that one. Thanks so much for joining us on the show and sharing your insights on different parts of the market. Let's take a short break. On the other side of the break, we'll tell you about some exclusive news break out of Delhi, and we'll also get you a conversation going with someone who works very closely with sovereign wealth funds. Sovereign wealth funds' role in markets, especially in emerging market like India, is only increasing. We have got somebody who works very closely with them as an advisor to give you an inside view of their mindset after this very short break.